What's up, YouTube? It's Kenny again. Headed to Missouri and drop in Springfield and pick up in Joplin. I'm in Illinois right now. I'm about 4.5 hours away from my delivery. And I wanted to make a video. This is going to prove to be a little bit longer of a video, I'm sure. I got a lot of stuff to talk about. I want to give you, an update on what I think is going on in the market, and then there's some specific things that I'd like to talk about. I apologize that I'm talking funny. I'm like that. I said in that last video, I'm going through a long process of a bunch of work on my teeth, and it's going to be a while before I'm back to normal. But before we get started, I'm not a financial advisor. I'm just a truck driver driving across the country, researching and trading stocks, and I will not be held responsible for any moves you make in the stock market. Not ever. I am not your mama. Do your own research, all right? So, I've talked a lot of times since I've started this channel about buying low and selling high, about taking advantage of red opportunities in the market. So when you look at the market right now, like obviously the S&P 500 has been climbing. It's had like a record year, kind of. I mean, I don't know if it's actually a record, but if you take out the say the 5 or 6 biggest movers, it's really only done about 6%. A lot of these high-flying stocks, Amazon, Apple, Google, have contributed heavily, Tesla, have contributed heavily to this 27%. And if you remove those from the S&P 500, it's really only done about average, okay? But what has fallen all year has been the small and mid caps. And I talked about this in that last video, how the Russell 2000 is down at levels that we do not see very often, all right? And every time the Russell gets down to these kind of levels, we have seen a big uptick over the next year or so. And, could it be different? Sure, it could be different this time, but I'd rather bet on what historically happens than not, okay? So basically what I'm saying is that, in my opinion, like, small and mid cap stocks right now are poised for a big bull market, okay? Now, nobody can predict exactly where the bottom is. I mean, we don't know. It could go lower. It hasn't historically gone lower than these levels that we're seeing right now, but it could continue to go lower. But with history on your side, you have to look at it, when you do the research, you have to look at it and think to yourself, even if this isn't the absolute bottom and it continues to fall some from here, the bull market is coming, okay? It's coming. Now, we see a lot of stuff going on right now that's contributing to the recent downturn in the market. And, some of those things are the Omicron variant, which is being wildly blown out of proportion, really, and only now is starting to kind of come back to reality. At first, everybody was just freaking out about this new variant because it spreads real fast, all right? But the statistics that are coming in suggest that it's actually pretty mild, and it's more like a flu, and very few people are actually dying from it. And I think that they've just kind of reported the first possible death from Omicron. A lot of people aren't even getting hospitalized when they get it. So I think that the virus is on its way out, but right now we are still experiencing this big bouts of fear in the markets about what's going to happen because of this new variant, all right? When in reality, it seems to me like the virus is kind of it's mutating in such a way that it's becoming weaker. And I think that this is kind of what we normally see with these types of viruses, that they eventually mutate down to a lesser deadly form. And I think that's what we're experiencing right now. So I think that we're on the precipice of being done in a big way with it. It's going to be around, but I just don't think that it's going to be killing people and stuff like it has been. And so also I think that a lot of people are kind of numb to it at this point, and they're still going about their normal business to a large extent, and they're kind of numb to it because it's been going on for a couple of years now. So I think that we're on the cusp of being on the other side of it, in a meaningful way. Like I say, that doesn't mean that it's going away. It just means that I think we're on the other side of massive shutdowns and huge slowdowns to the economy because of it and stuff like that. We're getting past it. All right. Another thing that's pressing down on the market right now is obviously inflation, and the Fed is going to speak here in the next couple of days, and everybody's expecting, and I'm sure that they're right, that they're going to talk about tapering faster. I don't know if they'll go so far as to discuss raising interest rates earlier, but I think that will happen. I just don't think they want to talk about it, so they keep from really tanking the market. But I think right now, a lot of that is being priced in. And that's why we're seeing everything fall right now over these last couple of days. Because the Fed's about to talk. Everybody is anticipating all of them talking about tapering faster and et cetera, et cetera. And a lot of that's being priced in right now. And we also have tax loss harvesting that's going on. Now, I think that we're probably past the bulk of that. There still probably will be some more throughout this month, but I think the bulk of the tax loss harvesting has already occurred. And I think there's just a lot of FUD in the market right now surrounding Omicron, surrounding interest rates and tapering. And I think that the market is starting to price, it's already been pricing it in, but it's pricing it in a big way here over this last 3 or 4 days, however long it's been. I guess it's been the last 2 days. I think it's really been pricing it in heavy before the Fed speaks, okay? So my point is that I think that right now, and I've said this before, when stocks are low and everything's dropping, these are the times when the money is made, all right? And so in my opinion, and I'm not a financial advisor, so, make your own decisions and do your own research. But in my opinion, right now is a fantastic buying opportunity for these stocks that have been beat down and have lost a lot, especially the ones that have been falling all year. It's only a matter of time before it reverses, all right? And so be greedy when others are fearful. And others are fearful right now. The stocks have been falling. A lot of the small and mid caps have been falling for almost a year. They cannot continue to just fall, okay? It will turn around. And, I gotten some comments here or there from people who have just lost money and they're frustrated, and one in particular who talked about how they've just lost money all year, and the only thing that's kept them alive is some S&P 500 funds and stuff like that. And to those people, I would say, if you started investing at the beginning of 2021, it was just bad timing, all right? It was a bad year for small and mid-cap stocks, for stocks that everybody on YouTube is talking about. It was a bad year for that stuff, and there's no question about that, all right? But that is not going to last forever, and really, if you bought throughout it and got your cost basis really low, in my opinion, I would not panic sell, because it's going to be a good thing for you over the next year or two. I really feel like 2022 is going to be a good year for these Russell 2000 type stocks, these mid-cap, small-cap type stocks. Now, I'm not saying we're going back to what happened in 2020. I mean, yeah, in 2020, where you could just throw money at any random EV stock or battery stock or whatever, and it would fucking double and triple. We're not going back to that. But what I'm saying is that we've recovered from all that craziness and everything's gone way down, and now we're going to start back toward the upside. And buying at these low prices, this is where the money is made, guys. So do your own research and invest in the best companies of those, not some random companies, not companies that are all hype, but look for those small and mid-cap companies, and it's going to pay off for you over the next year, I bet. All right. So that's my thoughts on what's going to happen with the market. All right. I put another $500 in the new Roth. I'm going to buy sometime either this afternoon or maybe tomorrow morning, because I think that it's just a great time to buy some stocks right now to hold. And so I took a little bit of that money that I put back for my teeth. I took $500 out of it and dumped it into this new Roth. I still got to put another $500 in there before the end of the year to max that out, to max my Roth contributions out. But so I wanted to also talk about some other stuff. All right, it's going to be kind of some real talk. So the Department of Justice has initiated an investigation, which I think is kind of a turning point, or it could be a turning point. If they follow through, if they do the right thing, it could be kind of a turning point, because something that I've talked at length before about in the last year has been how these research companies and hedge funds, they just destroy companies with these short reports and like colluding together to make money on shorts and on shorting stocks. And it happened with Lordstown Motors. Now, a lot of people are biased against Lordstown Motors because of the short report. Because the short report came out and said, oh, they're lying about the pre-orders and blah, 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 and said all this stuff. But, the reality is that you look at a company like Ford, who says they have a bunch of orders for this new EV they're coming out with. They don't have orders. They have pre-orders. The same thing Lordstown Motors had. And that short report from Hindenburg, I thought they would come out of it, but it destroyed Lordstown Motors, okay? And there's no question that Hindenburg and that a lot of these other big short sellers bought short positions in that company before that short report came out and made a ton of money because they did that hit piece. But it was all rumor and he said, she said, stuff in it. But they were able to completely destroy Lordstown Motors. I mean, yeah, they're still there. They've got to deal with Foxconn. Their stock's like $4 a share, man. And the truth is that if it were not for that short report, in my opinion, if it were not for that Hindenburg report, they would have been able to get the funding that they needed. They could have raised money through a share offering if they needed to. They could have gotten, they probably would have gotten the Department of Energy loan. There was a lot of things that could have fell into place if it was not for that short report. So the Department of Justice, what their investigation is doing is they are investigating exactly that. Research companies producing short reports to beat down a company so they can make money on short positions, and these hedge funds acting in tandem with these, and what kind of collusion there may or may not be between these two arms of the financial markets, and determining whether or not it constitutes market manipulation. And in my opinion, it absolutely is market manipulation. Hindenburg, I guarantee you, they, behind closed doors in their secret cigar whiskey rooms or whatever, they fucking told some people from these, whoever it was. I mean, I'm not saying it was these companies, but like Citron and Citadel and these big hedge funds, and said, look, we're about to put this short report out, so you might want to build you a little position or something because it's coming. And they all built a bunch of short positions, and then they released the article, the stock fucking tanks, and they fucking all make a bunch of money. That is market manipulation by definition. And I guarantee you that that's what's occurring. I mean, and it happens every year with all kinds of companies. I've seen it happen over and over again. And most of the time, the company recovers after that. They make all their money off the shorts, and then the company recovers. But sometimes, like with Lordstown Motors, they're destroyed. And that is wrong, okay? So I'm hoping that the Department of Justice is not just paying lip service to it, and I'm hoping that something actually does come of it. I think it's a fantastic step in the right direction. So if you weren't aware of that, I just wanted to talk a little bit about that, all right? Another thing I want to touch on is tax loss harvesting, okay? I've said over and over, I haven't really gone into deep thought about it on video, I don't think, but I've thought a lot about it, and I've talked about it here or there, that I think tax loss harvesting is horrible. I think it's stupid, okay? And I'm going to tell you why, okay? So I know a lot of people don't really know a lot about how taxes work and stuff like that, but what people are really doing with tax loss harvesting is they're taking losses on stocks to try to avoid paying taxes on the gains on their other stocks, okay? So I'm going to tell you why it's stupid, all right? So say you made 100% gain on Tesla, okay? Say, and we're just going to use round numbers so it's easy to calculate, okay? Say you made $100,000 on Tesla. You put $100,000 in, and you sold it for $200,000, and you made $100,000 of profit, okay? And say you're paying 25%. You're going to have to pay $25,000 in taxes on that gain. And you say, well, I want to find a way to offset this so I don't have to pay as much taxes, all right? So you're like, well, I lost $50,000 on this other stock. So if I sell that for the $50,000 loss, then that changes my gain to only $50,000. And now I only will have to pay $12,500 in taxes. Or let's just say, to make it real easy, you lost $100,000 on another stock. And so you're like, well, if I sell that stock, then I won't have to pay any taxes on all that money I made on Tesla. That's the idea behind tax loss harvesting. But what you have to understand is that it's not like you sell for a $25,000 loss and now you don't have to pay that $25,000 in taxes, okay? You have to sell for, if you made $100,000, you have to sell something for a $100,000 loss to avoid those taxes. How does that make a lick of fucking sense, all right? If you sell, now the only way I can say that it might make sense is this. If you can buy that stock back at a really low price too, or the same price or lower, then maybe it's worth it, okay? But if you think that stock is going to come back up, never sell it to try to offset. I'm going to tell you why. If you made $100,000 on Tesla and then you sell something for a $50,000 loss to avoid $12,500 in taxes, okay? You only made $30,000 or whatever it is. You still had to pay $12,500, okay? You didn't make $100,000 anymore because you sold one for a $50,000 loss. Are we in this to make more money or not? I mean, like, if you made that $100,000, why not just take the fucking $100,000 and pay the taxes? Then you made $75,000. Or you could sell the one for $50,000 to avoid $12,500 of those taxes, and then you made what? $35,000. It doesn't make any financial sense. The only way that I can think that it would make sense is if you really do think that you could avoid the wash sale rule, wait long enough, buy that stock back, and it will not have gone up. If you think that that stock is artificially down and it will eventually come back up, it's to your advantage to go ahead and hold it and wait for it to come back up. It doesn't. The only people that makes sense for, in my opinion, are ultra super millionaires who have tons and tons of taxes. They don't really care how much money they made in the stock market. It's just a game to them. And so they just want to cut their tax bill down on other stuff outside of the stock market. You know, real estate, or whatever they made at their job, and they want to use that to cut the amount of taxes they pay down. And even still, it doesn't really make sense from a financial standpoint, in my opinion. Like I said, unless you can wait the 30 or 60 days or whatever it is and buy it back at the same price, you know, then you really did get a benefit out of it. But what if during that 30 or 60 days that stock doubles and you lose a bunch of money? I mean, it just don't make any sense to me. Tax loss harvesting is fucking garbage, mathematical shit of people trying to avoid paying their taxes. All right, and I don't agree with it. I don't think that it's valuable for regular retail investors like us. I think that you should just not even pay attention to that unless there are very specific situations that will actually provide you with a benefit. Omicron, Department of Justice, tax loss harvesting. Guys, I just don't know what else to say other than I think that it's a really great opportunity in the stock market right now, in small and mid caps in particular. I do believe that a lot of these high-flying stocks are still going to do well. But if you look at the S&P 500, it typically does about 10% a year over a 10-year period. And when you see it going up 27% or whatever it did over this last year, you got to think that over that long term, that's going to still probably balance out to that 10% a year, which means we're coming up on some bad years for the S&P 500. Now, will it be next year? I don't know. Will it be the year after that? Who knows? None of us can judge that. But what we can judge is that historically, it's done an average of 10% every year over a 10-year period. That does not mean that it does 10% every year. That means it goes up 20% one year, goes down 10% one year, goes up 10% one year, goes down 5% one year, goes up 15% one year. It does different shit. So when you look at this big-ass 25% year, we're bound to be balancing that out back to 10% at some point. Is it going to be next year? Year after? Who knows? But you know, it's just that when you look at it from an averages standpoint and an historical standpoint, like, it's bound to balance itself out at some point. And the opposite is true when it comes to the Russell. You look at the Russell 2000 and how it behaves over long periods of time, and you look and you see it dropping down and hitting these lines every once in a while, and then it bounces back up big, and we're on that line. Like, we're right on that line. You know, we may go a little bit below the line, but every time the Russell 2000, the small and mid caps, every time they come down to these levels we're at right now, they have a big bounce back up over the next year or two. So historically, again, when you look at it from a historical perspective and what always usually happens, we're set for a big run in the Russell in these small and mid caps. And again, that doesn't mean every company. Okay, a lot of us started investing, you know, in 2020, in 2021, all right? And it's been very different. In 2020 was very different than what we've historically seen with how the stock market behaves. So don't expect to get back to the point where all these EVs are doubling and tripling and all this stuff's doubling and tripling all the time. I don't think we're coming back to that. But what I do think is that that freaked everything out and dropped a lot of the small mid-cap stuff, and now it's at levels that are like, hey, it's juicy, it's money time, it's you know, be greedy when others are fearful time. If you look at the Warren Buffett Fear and Greed Index, we are way down in the fear area right now. I mean, it is time to start jumping on some stuff. Times like these are when the money is made, all right? Just remember that. Think about it. Look at the history. Look at, the history of the Russell, historic charts. Look at historical levels and what happens after we hit these low levels. And what happens when the S&P 500 goes way up like this. What typically happens. Like, just pay attention to what has been happening historically in the stock market and try to use it to your advantage going forward. Now, again, we are kind of in some weird times, so crazy things could happen. Things could go lower from here. S&P could go higher from here. But eventually, this is all gonna even out and average out, and we're gonna get back to some kind of normal. And over this next year, we're gonna be having a lot of tapering. We're gonna be potentially having interest rates start to come up. Inflation is fucking just flying right now, and the market is pricing a lot of this stuff in. And I really think that it's a possibility that we could have a really good year next year, and it could start right in January, okay? It could start as soon as the fucking calendar flips. Things could start taking off. Who knows if that'll happen? I don't have a crystal ball, but it could, because, that's a lot of how a lot of these cycles work. That is expected, that a lot of these hedge funds and big fund managers, they've been doing this for a long time, and they know, here we go, like it's coming. And then when they decide it's time for it to come, they all start jumping on board, and next thing you know, everything's flipped. And it could flip really soon, guys. It could flip January 1, or it could take a little longer than that. So I want to also talk a little bit about OEG. The CEO bought another $250,000 shares over the last 2 days, guys. It's coming. I'm telling you, the CEO knows something's coming, and he's just dumping money into stock, okay? This is not like, stock-based compensation or anything like that. The CEO is just dumping his own money into the company, and that means something. Something's coming. It's already started to trend back up. There was an article of some ETF bought some of it. I mean, I really feel like it's coming. I think that there's a possibility with what I'm seeing. I said sometime in the next couple of quarters they would probably flip into profitability, and I think that it could be this next earnings report. I mean, it might not. Could be, or Q1 or Q2 of 2022. It could still be 6 months away. But with how he's dumping money into the company, and the fact that he has his finger on the pulse of what's going on there a lot more than we do, I mean, maybe he just sees that it's real low and he wants to get in now, and it's not just going to be this next earnings report. But whatever it is, they're going to flip the switch to profitability, and it's coming pretty soon. And, I'm hanging out in it. I think I'm going to make a lot of money in it. So if you haven't looked at it, and for those of you who have said, I've had a lot of people say, they haven't turned a profit in 20 years. I would like to say, go see what the name of the company was 3 years ago. Go see what the company did 3 years ago. What was it that CUI or whatever they were called? I can't remember. It may not be right, so don't quote me on that. Go see what the company did before it changed its name. What was their business? What business were they in when they were losing all that money for years and years? And then see what happened 2.5 years ago, or whenever it was, when they changed the name. And what does their company do now compared to what it did back then? It's a totally different company. You cannot say 5 years ago and 10 years ago, because it really is a totally different company. Like, they do not do the same thing they did back then. Back then they were involved in electronics and stuff. They don't even do that anymore. Now they're in infrastructure. They completely changed the whole business. The name, the CEO, the people running it, what the company does, everything changed. So if you want to be one of those people who said what they did for the last 20 years and blah, 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 you're going to miss out, okay? And, you know, this is just my opinion, but that's how I feel about it. Like, this stock is about to turn a corner, and, you know, I'm going to be ready for it. I'm ready for it. I got a bunch of money in it, and I'm ready for it, and I'm hoping that it does what I think it's going to do over this next year. And if it does, there's potential I could straight up double my account just with the one stock. So we'll see. Okay, with all that said, I think I've talked your ear off enough. I'm going to sign off here. Hit that subscribe button, like the video. Let me know what you think about all this in the comments below. Subscribe to the channel. Thanks for watching.